Good day, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this violent trade day, big break day in stocks, ETFs, and SPDRs for Thursday. And this is the 11th of June, 2020. So what a day. You know, we walked in today and things weren't well from the beginning. Yesterday, obviously, Fed Chair Powell, when he said the economy is going to be slow, it's not going to be a V-shaped recovery, interest rates have to stay down for longer, maybe to 2023, maybe yield caps, there's something that are being looked at, I can go on and on. So we broke yesterday, but with nothing like we did today. That feed came from as that news. Now remember, there's a timing event because the Fed statement comes out 1 p.m. Central Time. 1:30 there's a press conference, goes about an hour. Think of the time in Europe and Asia first. They're in bed doing whatever they're doing. Then after that it goes to Europe and away you go. And even in Europe when he's talking, it's somewhere between 8:30 and 9 o'clock at night typically. So you're not getting all the trade into it. Certainly the algorithm traders, but in the morning people wake up and decisions are made, and as they do it around the world, they didn't like what they saw. It did not help that COVID cases are ramping up in America. Texas, in Houston, we may wake up and it might be a shut-in again. The mayor is threatening it. That's how many are going there. Arizona's the same. Georgia's been good, but there are many other states, Florida, there are problems showing up everywhere. You can't get people demonstrating with these protests. They don't wear masks. They're standing next to each other and think you're going to be okay. There is no treatment. There is no cure as of yet. Keep that in the back of your mind. That is the reason that other states, very quiet, they're not allowing it. Chicago, we're just opening, but it won't be business as usual. Anything like it, I can tell you that right now. So as we take a look, we had gotten up on the XLK, the tech sector, the strongest. The QQQ and the XLK have been the strongest. They cleared this high. That's what I drew here. And then today plunged right back down. When we take a look at the plunge, how serious is it? Well, the break today hit 98.11. 98.11 is under 98.26. So for the first time since right here, back at the end of April, the market has broke the pattern of higher lows, higher highs. This was the never-ending run. This is the market that in March bottomed, and this is that V-shaped run the market has had. Has anything changed? Not necessarily. Money's changed a bit. The market got high. Maybe the valuations got high. Whatever it might be. But things on the chart now have gone into a correction mode. Now, how deep can it go? That becomes the question. When you look at these markets and you're up like this, I'm always looking at what I call my line in the sand, that 18-day average of closes. Markets that are up there, especially this market, it has paid excellent, excellent attention to that number on corrections. Here's what you did today. I don't know that there's a lot left on it to the downside or not. I know that it's not in that uptrend anymore. I know that the market had its trouble at the upper Bollinger Band and couldn't close over it, but it ran it for a very long period of time, and you lost the key. When you keep a slow stochastic with both numbers going over 80, what do I tell you? Until it's lost, the pros on the pullbacks are buying under that upper Bollinger Band, looking to get back to that band. That's what the pattern was, and it was a heck of a play that they had. Today the play ended. The market lost that reading. You lose the reading, you now have to work out what's called an overbought condition. So the market doesn't go from embedded to oversold. It goes from embedded to overbought, trying to get back to neutral and decide what's next. It could get oversold on a big break. If you were to crash in the market, 93.61 is a potential number, the lower Bollinger Band. But you're still over that 200-day moving average, and that's very important. In SMH, the same thing. The market slid through for the first time this number. You had your embedded reading, you lost it, boom, right back to that line in the sand, that 18-day average. Now the traders, I think, are neutral in this market. XLK. Tell me what averages you see these markets breaking down to. It's a story over and over. Back to that line in the sand, that combination in this case of the 100-day average and the 18. The break today at 67.41 did not take out 66.75, but you've lost the upside momentum. You've lost the following in the market. That's how I look at it. When you lose that reading, the pros that just kept pushing, they're not going to push anymore. In the energy sector, you broke through the last low. If we take a look at the chart, this is how the market was yesterday. When you lose the embedded reading, what do I say? Unless you get it back immediately the next day, the odds favor that you're going to make a run at the closest moving average under it. Here's the market. Here's today's opening. It never tried. It just gapped lower, and that was the end of it. So my theory, yeah, it worked in that case. Here's something else, and you know, you've got to remember, the afternoon when I'm putting out my Spider ETF subscriber video, last night I clearly said, folks, because of the Fed move and all, here's the buy points or the sell points in the market, but I want you to look first thing in the morning at the futures. I must have said it 6 times, 8 times. I said, because if they're down sharply, you do nothing. Not if you're looking to be a buyer. This could be a bigger event. That's what happened today. And no, in looking at it now, what is it? Well, it's a correction. I don't know that it's a top, not a top. I think it's a trade top. I'll stick my neck out for that. I think there are traders who have wanted to buy these markets, and the market's going to come to them and offer some of those people an opportunity as long as COVID can be controlled. And that's what scares me about Houston if they go back into a shut-in. If they go into a shut-in, the psychology is terrible for the country. Remember that. You held the key number in the QQQ, but I think the buyers will now go to the side on it. Why? The reason is because you lost the embedded reading, so you go from the embedded, which is super bullish, to overbought, which is what that is. Now you got to work that off. The EFA, the emerging markets, we had talked, generally you don't stay over when you first get to that 200-day average and hang there unless you really run away from it. This market worked hard, really hard, to get back to that number, and it's finally slipped back. Okay, so now you're in what trend? You went into a downtrend today. You've got lower highs, lower lows. You closed under the 18-day average, and momentum turned down. Now, any close back over the 18-day average puts the bias neutral. In gold, gold slipped back today in the futures. First of all, the futures closed about $19 higher. But the reason you're looking at this is traders are realizing each time the stock market's had a hit, traders look around, what's been making me money? You know, I'll sell the good stuff that made me money so I can hold on to the bad stuff because I'm underwater in it. You don't have to agree with that. Think about what I'm saying. And I've seen it. You know, I have had an advantage most don't have in my life. I've owned futures firms. I've owned stock firms. I've been in New York. I mean, and I've seen this. The players change, but the game doesn't change. So I'm looking right now, support 161.99. I don't think you've scared the gold traders off. To get the market neutral, you have to get back under this 160.52. That would neutralize them. Right here, I don't think you scared them off. The gold miners, different case. The market couldn't yesterday get up and over that 18-day average, and it failed again today. Now, the last break closed 32.44. You took that out today. So you have an outside day down. If you're going to turn this market on a dime, be it Friday or Monday, the high of today has to be taken out. If not, it's a working game, different game. You've left the uptrend, though. I should have taken this arrow, not have it point up. It should be pointing down. My mistake. TLT, the market got to 164.23. So what did we do? We had what I termed a potential breakout right through here, not a trade breakout, a potential breakout. This is the close of business on the 10th. Why would you go into the FOMC meeting? You're getting a good rally coming out of it. The pattern is one of a higher high, lower low, not a trend. Today the market shoots up. with all the news. We'll see what it's going to do. It hasn't been trending. I'm wrong in my idea, if you can close over an upper Bollinger Band, that was a breakout. Then it was a false breakout. FXE, we'll see if the market can right itself. It still has a bullish embedded reading. It still has a pattern of higher lows, higher highs. Lose that reading, then the 105.06 area comes into play potentially. Don't lose it, and the 108.14 area is still very much in play. So you put that all together, you try to come up with game plans, and that's what we try to do. So at approximately after 4 o'clock in the afternoon, typically, I start recording a SPDR ETF video. Now, originally we were doing 27 charts. I've added JETS, I've added UNG, HYG, I can go on and on. I just keep adding charts. We're into the low 30s, and I'm going to get you up to about 40 charts in this. I might bring back the pot stocks even, because a day like today, you might want some of that. But in any case, it's not 27 charts anymore. It's larger. And I cover it to give you an idea. And we are right now in our office working on a package for you. We built the landing page for it today on our website, where at a discount, you're going to be able to get both the morning futures video and the SPDR video, so that you've got the afternoon game plan, but now you can look, especially if you're a trader that's trading a lot of these different ETFs to count on the futures markets, should I be doing that or not? I'm tying them together. I talk as though they're together as well, if you're watching what I do in my parlance with it. So how do you get at least a SPDR to get yourself going? All you need to do is go to our website, go under the word research. And by the way, if you're a subscriber to either and you want to step up, we'll obviously cancel one subscription and allow you to roll into the next one. You lose not a heartbeat with it, and there'll be a discount on the total price for it. So you go to the website, read about it. That's the first thing. It'll explain how this all works, and away you go. I'm Ira Epstein. You have yourself a great day. I will talk to you all tomorrow. Trade well. Bye-bye.